right. Let me give you all a little context. I am an attorney. I am not giving you legal advice. I developed a very, very keen interest in tax strategy when I realized that I was paying more in taxes than I used to earn all year long as my business began to grow. I save hundreds of thousands of dollars every year on taxes using some pretty cool tax strategies. We actually run a tax strategy workshop, which is sold out and has a waiting list for the next year. So this isn't like a pitch that you should sign up for our tax strategy workshop. I'm just giving you some context. So let's first talk about tax avoidance versus tax evasion, because there's a really big and important distinction between those, right? Tax avoidance is 100% legal. The United States Supreme Court has come out and said over and over again that tax avoidance is legal. You are completely allowed to arrange your business affairs in such a way as to minimize your taxes. There is no patriotic duty, there is no ethical obligation to pay more in taxes than you are legally required to pay. That is a paraphrase of a United States Supreme Court justice saying you can avoid taxes if you're smart enough to do so and don't leave the room right when the tax saving strategy is about to begin. Tax evasion is illegal and quite stupid, and actually very unprofitable too. Tax evasion is where you don't report your income or you make up expenses. That's basically tax evasion, all right? So tax avoidance is, I earned $3 million this year, and I'm going to, and my company is going to provide a company car for me, and my company is going to send me on these trips that I've arranged as business trips, and my company is going to provide an executive assistant for me, and my company is going to provide all these benefits for me, and I'm going to arrange my business affairs in such a way as to minimize my tax liability. That's tax avoidance. Got it? Tax evasion is when you say, oh, I only earned $1 million this year, and you lie about the other $2 million that you earned. Tax evasion is when you say, I had these expenses that I didn't actually have. Got it? Everyone clear? Okay. Next, CPA. Who's got a good CPA? How do you know you have a good CPA? Are you a CPA? You are? All right. Well, then you can back me up on this. All right? Most people who have a CPA exam, a CPA credential, did not study not even 1 or 2 courses in their entire life on proactive tax strategy. True or false?
That's correct.
That's correct, he says. All right? CPAs are not trained to be tax strategists. Tax strategists are trained to be tax strategists, and not every CPA is a tax strategist. In fact, most are not. All right? Most CPAs don't know shit about tax strategy. They just don't. If you're depending on your CPA to give you tax strategies, it's a lot like asking the fox to guard the hen house for you. Why is that? CPA? Why is that? P. What does the P stand for in CPA? Public. The C in CPA stands for public. As an attorney, I have an ethical obligation to be the advocate of my clients. I am on your side against all comers. I am your advocate. That is the ethical obligation of an attorney. Make sense? Yes? In CPA school, they teach the CPA that their ethical obligation is to protect the public against you. So your CPA is trained that they have an ethical obligation to protect the public against you, the business owner. Got it? So you're asking true or false?
Depends on the CPA.
I'm talking about what you're taught in school.
Yeah. Taught in school, yeah.
That's what you're taught in school.
For bachelor's, but if you go to a master's in tax, it's different.
If you get a master's in tax, which 5% of the CPAs on the planet have that?
Probably not that.
Not even that much, right? So for all practical purposes, your CPA was trained to be an advocate for the public against you. The CPA is trained to account for what has happened in the past and to accurately report what has happened in the past. What is the word that I keep saying over and over again? Past, in the past, over and done with. Too late to do anything about it because it's over, right? A tax strategist is a person who looks into the future, who helps you think ahead, plan ahead, anticipate, adjust your plans so that you can avoid having tax liability. Your CPA is the person who says, tell me what has already happened, and I will report it accurately to the governing authorities. You understand why your CPA, unless your CPA is also a tax strategist, which most are not, why they really are not the person who you should be turning to for tax strategy advice. Are you all clear about this? Really, really important to understand this. Most people are clueless about this, and I used to be one of those people until one day I realized, holy shit, I'm paying more in taxes than I used to earn all year long, and I had to begin educating myself about this, and I began to become a tax strategist. Okay. Now, NFTs and cryptocurrency. The reason why, and I'm oversimplifying this, so if anyone really knows a lot more about this than I do, and probably many of you do, unless I'm saying something that's completely misleading to everyone, please don't distract us with the details. I'm trying to get the point across. Fair enough? All right. The reason why ICOs are allowed, the reason why Ethereum was able to issue ETH without having to do a securities offering with the SEC is because they basically made the argument that it's not a securities offering and it's not really currency. They said it's an asset. It's a token that it's like a stamp, like a postage stamp. We're selling postage stamps that you use to pay for the Ethereum network to do its thing. And you're buying these stamps because you want to pay the Ethereum network to do its thing, and you're not buying the stamps with the expectation of them going up in value. You understand the concept? Yes? This is how Ethereum was able to sell ETH in the United States without getting reamed by the SEC. Okay. Now, the problem with that, if you're not paying attention, is that cryptocurrency and NFTs are treated as property. So here's the classic problem that, by the way, raise your hand if you're trading crypto. Okay. You buy, I'm just going to say, a coin at $1, and your A coin goes up to $5. You sell your A coin, you trade your A coin for B coin, and the B coin now goes from your $5 worth of B coin drops in value to $3. You with me? You bought A coin, coin A, at $1. It went up in value to $5. You decided to trade out of it, and you bought B coin. You bought $5 worth of B coin, and the $5 worth of B coin has now dropped to $3. Where are you net net? Started with $1, went up to $5, traded out, went down to $3. How much profit did you make? How much? 4 is the correct number. And if you put 2 on your taxes, you fucked up. This is why. Because as far as the IRS is concerned, you bought an asset at $1. You bought a piece of property at $1. And then you sold the piece of property at $5, and you made $4 profit, and you owe taxes on that $4. Then you took the $4 and you bought a different piece of property, and then you lost money on the different piece of property. But you still owe taxes on the $4. Get it? If you buy a piece of real estate for $1 and the real estate appreciates and you sell it for $5, how much capital gains do you have? It doesn't matter for this example. You bought it for $1, it went up in value to $5, and you sold it. How much capital gains did you have? You have $4 of capital gains, yeah? You sell the real estate, you take your $5, and you buy collector baseball cards. And you put all your $5 into collector baseball cards, and collector baseball cards go down in value to $2. Yeah? How much did you make on the real estate? How much did you make on the real estate? $4. You owe taxes on the $4.
Unless you sell
No, you owe taxes on the $4. The fact that you sold the real estate for $5 and took the money and used it to buy something else is not relevant to the first transaction. The first transaction stands on its own. You made $4. CPA, am I telling the truth? Yeah. I'm telling the truth. Give her the microphone, please. You're about to do something that's going to be very problematic for you in this whole thing, which is you're about to use common sense. Don't do that. It's just the way it is.
Okay, if you sell the first time, you make 4. Okay, then you use that money and you buy a second time. But if you sell the second time and you use money, it goes income and expense.
No. Different transactions.
If it goes under a company or if there is a difference.
CPA,
Really?
back me up.
That's correct.
Give him the microphone, please. I've decided to include
Yes,
you in my
I
presentation.
need that
He
explanation.
might not
please.
be a CPA, by the way. I don't know who this guy is. He seems like a CPA.
I really need that
I am
explanation.
actually a CPA.
Right, because someone who would pretend to be a CPA wouldn't say something like that.
mean,
I'm gonna trust you. You have two very nice-looking people next to you who seem to be believing you, so I'm gonna believe them.
but yeah, I mean, for the first transaction, you would have a $4 capital gain, and that's how it is. And whatever happens after that, like it doesn't matter. You wouldn't be able to reduce that gain unless you have a capital loss on the other transaction. Where if you let's say on the coin B where it goes down to $3 and you end up.
Let's just stay with the real estate. You buy a piece of real estate because everyone understands real estate. You buy a piece of real estate for $1, you sell it for $5, you made $4.
Yeah.
You take your $4, you take your $5 of cash, your $4 of profit, and you decide to invest it in baseball cards. And now the baseball cards go down to, let's call it $1 in value.
But are you selling it or not selling it?
And let's say you don't sell it. Let's say you don't sell it.
Okay, so that's a different.
You got the $4 capital
Yes.
gains.
Yes. But if you sell it, then you lose that money.
If you buy the real estate for $1, sell it for $5, and then turn around and take the $5 put into baseball cards, and the baseball cards drop in value to $1, and you sell them for $1, does that loss offset the capital gains on the real estate?
Yes. Yes.
If it happens in the same year, and it's
If it happened in.
If it happens in the same year,
Okay.
and here's the next problem we run into, which is, and if you have good records, because of course, everyone who's currency trading is keeping meticulous records, aren't you?
Yes.
Of course you are, right?
Sure.
Every time you wake up at 3 o'clock in the morning and binge buy some fucking asswipe coin because you heard someone say that it was going to go up in value, and then you wake up the next day and you realize that's insane and you sell it quickly. I mean, you're recording all these transactions, aren't you? Are you starting to see the problem here? All right. Okay. Next, 1031 exchanges. Raise your hand if you know what a 1031 exchange is. Keep your hand up, please, if you understand that you could use 1031 exchanges to get in and out of real estate positions without capital gains. Raise your hand, keep your hand up if you believe that you can get in and out of NFT or cryptocurrency positions without capital gains under 1031. You cannot. No, you cannot. I've been all around this NFT crypto world for the past several months, and some very, very, very smart people are very, very, very misinformed about the application of 1031 exchange to cryptocurrency and NFTs. It doesn't apply. It doesn't apply. And anyone who tells you, oh, don't worry, you do a 1031 exchange, that is a person who doesn't know what they're talking about. The very nice IRS investigators who I was speaking with earlier were literally laughing. I wouldn't go so far as to say giggling, but they were certainly amused at how many people are walking around with this misunderstanding. They're anonymous, but they're here. All right. Be aware that there is no statute of limitations for this stuff. So from the day you file, there's no statute of limitations. Just be aware there's no statute of limitations on this. The IRS has the broadest powers of pretty much any federal agency to file a lien or to seize your assets. The IRS can do things to get money out of you that hardly any other agency has the power to do. Don't mess with the IRS. Seriously, just don't do it. It's not worth it. I understand that we, as a community, we tend to be very independent. We tend to be libertarian. Some people tend to even be a little bit anarchistic, whatever that word is. We tend to think of ourselves as being like very independent. We'll live off the grid, right? Have any of you actually lived on the lam? You have. It wasn't very fun, was it? It's not sustainable. You do eventually get caught, no matter how smart you are. And most people who are living on the lam, they don't actually get caught. What they do is they turn themselves in because it's such an unpleasant experience. Am I right? Are you still on the lam? You lived in a third world country? Were you on the lam? But you might as well have been, is your point. Right. My father lived on the lam. My father was a professional white-collar criminal. And for years, he lived on the lam. And I'm telling you, his life fucking sucked. He eventually just said, I can't live this way anymore. They all turn themselves in. So if you're entertaining, I know none of you are stupid idiots, so I'm not going to say any of you are entertaining this, but you will run into some stupid idiot who has this really romantic, naive, immature idea about living off the grid and telling the IRS to fuck off or something like that. And it's just really, really impractical. And if you think about it for more than about 5 or 6 minutes, you realize just how impractical it is, particularly if you have children or healthcare needs. Just doesn't work. All right. Good news, bad news. Bad news. You have to report your income, and you're probably going to wind up paying taxes from the profits you make on all this amazing work you're doing. That's a good thing. You're doing amazing work, and you're going to profit from it. That's good. No one likes to pay taxes. No one likes to pay more taxes than they have to. Here's the good news. Paying taxes can actually be quite profitable. How's that, you say? How can paying taxes be profitable? You want to know the answer, don't you? All right. Because of the nature of paying taxes, which is no one does it unless they have to, and no one like over-reports their taxes, right? In our society, our tax returns are considered to be a pretty reliable measurement of our income. And if you want to tap into any kind of traditional capital source for buying real estate, for raising capital to fund a venture, for really anything, if you want to tap into capital, your tax returns are almost universally going to be required. And to the extent that you're using that capital to make a lot more profit than you otherwise could without access to that capital, well then by definition, paying the taxes and filing the taxes gives you a path to making a lot more money. I work with a lot of people who make a lot of money and they don't file their taxes as often as they should. You should file your taxes annually, obviously. And they're constantly being frustrated because they're constantly banging their head against the wall when they have opportunities to make their move on real estate, when they have opportunities to make their move on business opportunities and things like that, and they can't act fast enough because their taxes aren't current and filed. All right, so just keep that in mind. Good news is it doesn't have to be so bad. Good news is that if you are working with a tax strategist, a good tax strategist can save you a lot of money. I mean, hundreds of thousands of dollars a year in savings with a good tax strategist, so it doesn't have to suck so bad. Record keeping, being proactive, and long-term thinking. And I know I keep kind of beating on this point, and it's just because I keep running into people in this community who have this idea that they're going to live completely in the metaverse. And maybe one day you'll be able to live completely in the metaverse, but not now. Now you got to live kind of in reality, and you got to negotiate your way back and forth between reality and the metaverse. And yeah, I know it pisses people off because they're like, metaverse is reality. Yeah, it's not. It's the metaverse. And so I would just encourage you, and I guess I'm speaking to a lot of the younger people. You know, I'm 50. I don't think the same way at 50 that I thought when I was 25. When I was 25, I thought I had forever to live. When I was 25, I thought I could beat the world. When I was 25, I thought I could get away with anything. When I was 25, I didn't understand what some of the choices that I was making might have meant. And I would just encourage everyone, particularly the younger people who are maybe for the first time really coming into a lot of wealth. And congratulations for that. That's fantastic, and I celebrate you for it. I really do. Think about where you want to be in 10 years. Think about where you want to be in 20 years. Think about how you want to be living your life before you start fucking around with your taxes. All right? Get a microphone over there, and then there, and then there, please. Who knew that taxes were such a popular topic? Yeah. Just a few quick questions. I'll make them quick. Is that microphone on? I don't think it's on. Just tap it.
Check, check.
Yeah, now it's on. Just talk directly into the top.
All right. Since you said 25, I just turned 25 like last week. So what's some advice you would give to your 25 self, if you could? Like some legit advice.
I would advise my 25-year-old self to take out his phone, click on that QR code, and
Okay.
post at the top question for Rjob.
Okay.
And I'll talk about that later, because like the advice that I would give myself is not a question. I can't just summarize that in a minute.
Okay. And just quickly, I'm not a CPA but I got my bachelor's in accountancy, so I'll speak to you later.
You what?
I got my bachelor's in accountancy. I quit my job at PwC.
Okay.
So I'll talk with you after.
Cool.
Yeah.
Use the QR code. Blue shirt and then white shirt.
All right, so let's say I were to own a crypto LLC and then I've got my individual accounts. How do I disseminate how my wallet is held, staying away from commingling? Because who is the owner of that wallet?
My recommendation would be have multiple wallets. First of all, you should have multiple wallets because the people who came up here and talked about rug pulls spent an hour teaching us that we're idiots if we don't have multiple wallets. So I would have multiple wallets for security purposes. And second of all, for record-keeping purposes, if you've got multiple entities, let each entity have its own wallet. It will make it much easier from a record-keeping standpoint.
But there's still no way to name that account in the specific entity's name. Is there?
Why can't you? When I go onto Coinbase, I have to identify who owns the wallet.
Okay, so I would have to use a KYC approved firm, basically.
Or you could have a cold wallet and have it totally and completely anonymous, but still accurately report your income, and just, buy one cold wallet and put, a little sticker on it that calls it LLC1, and put another one LLC2 and another one LLC3. I mean, just pretend like you were going to have a wallet for yourself and another wallet for your best friend who, for whatever reason, can't operate a wallet themselves, and they say, please manage my wallet for me. You would keep those two things separate. You wouldn't commingle them, right? All right, last question. I guess and then Art up here, and then we're done.
Mike, hello, everyone.
Hi.
Question is unrealized tax gains that's being floated around. We're going to be taxed by Janet Yellen there. What's your stance on that?
I haven't done enough research to say anything intelligent in front of an audience with cameras recording me.
Well, thank you.
You're welcome. You want to just shout it out back there?
So me and my business partner have been complaining about our CPA for years. So we switched from one CPA to the next, and I think you just hit it on the point here is you need a tax strategist.
Yeah.
We've been complaining for a long time, like why can't they give us some foresight over here? And then we switched to another one. Why aren't they giving us foresight? So I think I just wrote that one down. That speech right here was just, it was worth it right there.
You should tell the event organizers something like that. In fact, you should all say those sort of things. And go to the QR code, and I'll be happy to tell you if we open up I mean, normally we only do the tax strategy workshops for our own clients, but if there was enough demand, enough interest, I could be convinced to do one for all of you. By the way, it comes with a triple your money back guarantee. Well, it comes with a triple your money back guarantee. I mean, we save you 3 times the cost of the workshop, or you get your money back. It's pretty simple. Yes. Just call it out.
You talked a bit about wash trades.
I don't know what that term means, so no. What's a wash trade?
Selling at a loss. I understand it's generally not a thing you can do in traditional markets, but in crypto, it is legal. Selling at a loss immediately buying back. It's legal in crypto. Is that going to change? Yeah, probably.
So this is what I tell everyone. So this is what I tell everyone who. This is what I tell everyone when I start talking about this world. I say, no one knows everything. And I think that we can all agree that no one knows everything, right? And the person who pretends like they know everything is the person who probably you should trust the least because they probably know nothing. We all have like this Swiss cheese of knowledge when it comes to this stuff, right? We're like, I know probably more than anyone on the planet about this and this and that. And then like I step 1 inch over here and I fall in a hole and I know nothing. And I'm not embarrassed to admit that because I know what I know and I know what I don't know, and that I don't know. Yes, and then yes.
Just give us one example of strategy that's used today in cryptocurrency.
It's not strategy in cryptocurrency. It's just tax strategy. Tax strategy is tax strategy. It's any tax strategy that's applicable outside of crypto is going to be applicable in crypto. Any tax strategy that's going to be applicable in crypto is going to be applicable outside of crypto because the IRS doesn't make a distinction. It's income. Income is income is income.
Okay, but do you see the IRS going towards a policy like they're doing in Switzerland and Portugal that the way, they're attracting, a lot of people are even like foregoing their U.S. passports so they can move and have this type of environment. Do you see the IRS going to something like that? Or?
Going to something like what? As a United States citizen, you have worldwide tax. You can earn $85,000 a year offshore tax-free. After that, you have the United States government is one of the few countries in the world that does worldwide taxes on its citizens. As long as you hold as long as you are a U.S. citizen, no matter where you live in the world, you are going to be subject to IRS rules and regulations. Well, then that's, I guess, a tax strategy. But that's not a cryptocurrency tax strategy. That's just a tax strategy. That's what I'm trying to say is like, everyone's making this so much more complicated than it has to be because they think that because it's cryptocurrency, it's somehow different from everything else and when it comes to taxes and IRS, and it's not. It's just, if you have a wildly successful online pet supply company and you decide you don't want to pay income taxes to the United States government anymore, so you're going to give up your U.S. citizenship and move to someplace else, well then, that's a tax strategy. Crypto, dog food, what's the difference? This guy's been going crazy.
earn.
Deanna,
Okay?
behind me.
Play to
Big
earn.
shot.
Okay? You have you sponsor a lot of kids playing, okay? And you are making money. We have an LLC, we are making money, but at the same time, we are splitting the profit.
Can someone get her a microphone? Because I'm not going to be able to repeat this whole question. Oh, okay.
Thank you. Okay, in the world of play to earn,
Play to earn, yes.
okay, you have your wallet, and at the same time, you need to keep a lot of wallets, and you need to open a lot of accounts when you are sponsoring the kids to play, okay? And you are splitting your profit. Right now, asking an accountant will not give you the exact answer if you need to report the 100% of the profit, or because you are splitting 50-50 with the kid that is playing. So where can we get or learn about that, how to report
What kind of
these profits?
accountant doesn't give you an answer? This is like the simplest thing in the world. You count all the revenue as revenue, and then you got an expense.
So those will be considered an expense even though each kid has their own account? Because the
Your
account
company
is not...
has revenue coming in, and then
Yeah.
it has expenses. The expenses are the money that it shares out as compensation to the kids for doing the work.
Okay, but a little bit ago you said we need to keep all the records. So that means we need to keep the records of each individual account.
Okay, let me back up.
Yes.
I also own a bookkeeping business. The name of the bookkeeping business is Bookkeeping That Doesn't Suck. That is the name of the bookkeeping business.
That's the real name?
That, are your clients? Does it suck?
It does not suck.
It's good bookkeeping because it doesn't suck. That's the name of it. You go to the QR code and say, I want to know more about bookkeeping that doesn't suck. I can connect you up. I got a whole bunch of my bookkeepers downstairs at our booth. This is not the context for me to like give you a whole bookkeeping strategy, but conceptually, money comes in, it's income. Money goes out, it's an expense. Money comes in, it's income, goes out to this kid, it's an expense, goes out to that kid, it's an expense, goes out to that kid, and it's an expense. Now, the fact that you're saying they're kids makes me start thinking, okay, now you got to deal with 1099 issues, and now you got to deal with child labor law issues, and there's a lot of issues.
Yeah, they are overseas, most likely Philippines or Venezuela.
Oh, well then,
No
I guess, I don't know.
problem. Okay.
Talk to an immigration lawyer or an employment lawyer. All right, last question, and then our next speaker is like, is he ready or not ready? He's not ready? He's okay, then just let me know when he's ready and I'll stop. So we'll just keep going until he's ready. No rush. I got plenty of questions with their hands up, so no sweat. Microphone. John, this microphone.
Can you please pass him?
Here's another mic.
Yes, hi. Sorry, it might be a stupid question, but I will ask it anyway. Have you helped any crypto mining company in the past? Have you any example of tips or strategy that you had with this company?
I didn't understand the question.
Okay.
You have a crypto mining business,
Yeah, exactly.
and the crypto mining business generates revenue,
Exactly.
and the crypto mining business has expenses.
Exactly.
All right.
Like any other business.
So can you give me an idea of how much revenue it generates?
I don't know, like 1 million by year.
$1 million a year in
Yeah.
revenue. Great. Okay. And what are the expenses?
Well, a lot of different things, infrastructure.
All right. So it's going to have 179 capital investment expenditures. For example, the equipment that it buys, which if you have a good tax strategist, they will help you accelerate that depreciation. It's going to have ongoing operating expenses, rent, electricity, things like that. It's going to have labor. It's got employees, correct? Yes?
Yes.
Okay. You're one of the employees, correct?
Yeah.
So it pays you a salary of some kind. It pays you benefits. All those are expenses. It provides you a company car. See, I gave you a tip.
So it's like any other operational business.
It's like any other kind of a business, right?
Okay. All right. Thanks.
The thing is, just
And apparently, if you do it in Kentucky, there's no capital gains. According to some guy that I cannot verify if that's true or not.
yeah,
your
just
question?
to finish the question, the thing is, well, we're from Canada, so I don't know if it changed anything, but the income that we get, the government doesn't know that we have it. It's just in a wallet, right? And then it's when we like take it out of the wallet that they know that we have it. So there's the whole thing of when do we declare it?
When
do
you
we
get it.
declare?
That was the whole conversation at the beginning of the difference between tax avoidance, which is legal, and tax evasion, which is not.
So what happens if we get it, we mine, and the Bitcoin or whatever has a certain value, and then it changes? We declare the value of what we got when we mined it, or yeah, that's a whole.
I
challenge here.
believe, and I reserve the right to if you go on the QR code that I've been asking you guys to go on to, I will give you updates to all this stuff if I figure out that there's a different answer. I believe that you don't book the income until you dispose of it and realize the value.
Okay.
I think that's the right answer.
Right.
I'm getting a ton of people who are asking for a ton of extra information, and I'm happy to do a webinar. I'm happy to do all kinds of stuff. And if you use the QR code and put Ask Arjan, and you tell me what you want to know, today, tomorrow, next week, next month, I'm happy to keep this conversation going because quite candidly, I learn as much from you as you're hopefully learning from me. All right? He's still on one knee, so I can keep going. Pass the microphone back there.
Yes, that was going to be my question.
Just pass the microphone back there. Pass the microphone.
Look at the room. I mean, this is one of the most people I've seen in the room today.
That's
It
right.
Seems like there's a lot of interest in this. Just what do we do? Like I know there's
After you're done telling, the
my
conference
CPA is a
organizers.
dinosaur. Like I'm trying to like.
All right, so here's what you do.
I'm constantly trying to have them understand what DeFi is and what DAOs are and multiple wallets and keeping like on these. It's a mess, you know. So like.
All right,
I understand you're just one guy, but like as someone who's in the industry,
I'm not one guy. I've got 120 employees.
Like just as a general statement to the room, what do we do now? Because there's a lot of unrealized gains going on like in this whole building, and it seems like everyone here is in the industry or has like some involvement. It's not general pop here, just like
All right, so
dipping their toes in, you know.
All joking aside, like sincerely, I have 120 employees. I mean, my business will do about $25 million this year. It'll do about $35 million next year. We manage over 500 businesses. I've got a lot of resources that I'm happy to put to work answering your questions. Because the more questions you ask, the more I
Become an
instruct
expert
my
in.
team to do research, and then they educate me. And I get smarter when you ask me more questions. So I'm sincerely happy to do that. And I know I keep saying QR code, QR code, QR code, but if you go to the QR code and tell me what you want to know about, I'll put you on an email list. And look, if you want to unsubscribe because you think it's garbage, then unsubscribe. But I'll start doing some programs. I'm happy to do it. That's number one. Number two, this is somewhat self-serving of me, but I would appreciate if you would do it. To the extent that you go on social media and you tag me and you say this was like the best presentation of the whole conference and things like that. No, but listen, this isn't an ego thing. It really helps me because I would like to be invited to do this for other conferences, right? And if other conferences know that I'm bringing a lot of value, then they'll invite me and then I can do more stuff like this. And I like doing it. So I would appreciate if you do stuff like that. And this is Deanna. She is my social media manager. And if you want to give her like a testimonial, I wouldn't complain about that either. And then we'll promote it. And I have a lot of resources. I mean, like I did a 4-hour presentation on blockchain, on like the origins of money, like the real root origins of money. I did like a really cool 4-hour presentation that I'll share with you for free. I have a group of clients who, we call them iron sharpens iron. We get together 3 times a year. And I'll tell you straight up, they pay $33,000 to go to 3 meetings a year with me. And we get together, yeah, they're a member. She's like, look at me. And they asked me, and I did a 4-hour presentation. We recorded it. I'll share it with you for free. Anyone who wants to see it, just put it on the chat, you know. You want to know about it. I got time for maybe one more question. Yes. Whenever you're ready, let me know.
All right, just last question.
I'm at your disposal.
Oh, no, I mean, you're doing great.
Thank you.
You're helping us out.
I'm happy to do it. Okay, last question.
I think it's me. Thank you very much. I think you've been very candid, and it's awesome to hear. I think what could be helpful to sell your services to us right here, it kind of seems like that's part of this, is I think everybody kind of is thinking in the back of their mind, what's like 2 or 3 things about crypto, like unique things about it, that give you some sort of a tax advantage strategy. Like I think people are talking about the tax loss harvesting, but that's kind of works with other types of assets. But what about crypto? What difference about it relates to 2 or 3 strategies that you know of? Are there any that you've discovered that aren't super secret?
I'm not keeping any secrets, and I'm trying to make this as clear as I can. And if someone knows of something that I don't know, please come and educate me. It's not that different. It's basically exactly the same as any other income and any other expenses. Everyone treats it like it's different. It's not different. From a tax strategy standpoint, it's the same. Income is income. Expenses are expenses. Legitimate expenses are legitimate expenses, and bullshit expenses are bullshit expenses, and documentation and record keeping is documentation and record keeping. And if you earn your income by selling dog food, or you earn your income by selling legal services, or you earn your income by selling crypto or mining crypto or making NFTs or driving a bus, it's income. And then you've got expenses. And the expenses are either legitimate business expenses or they're not legitimate business expenses. And it doesn't matter whether the legitimate business expenses are related to your dog food selling business, or your law firm, or your shoe store, or your crypto mining operation, or your NFT minting operation, or your trading of stocks and bonds on the securities exchange, or your trading of crypto. What I'm trying to say is, like, and if I'm wrong and someone knows about some aspect of cryptocurrency that makes it completely different from any other kind of asset or income or expense, please educate me. You know something?
I mean, I just think in general, over time, there's been a lot of gray area on different aspects of crypto. So there's probably different people in the room who are searching for answers on that. And so, I mean, there's very specific questions like blockchain rule, staking, how DeFi is treated, how mining. So this is like stuff that you should
All right.
just get an opinion from an attorney on and have them write it out.
Well, yeah, you should work with a tax attorney. But, so this is the last thing I'm going to say, all right? The basic fundamentals of running a profitable business are the basic fundamentals of running a profitable business. No one should invest in a law firm that doesn't have a business plan. No one should invest in a restaurant that doesn't have a business plan. No one should invest in a shoe store that doesn't have a business plan. No one should invest in a theme park that doesn't have a business plan. No one should invest in a crypto mining operation that doesn't have a business plan. No one should invest in an art gallery on Lincoln Road that doesn't have a business plan. No one should invest in an NFT gallery that doesn't have a business plan. No one should invest in a business that doesn't have a business plan. Your business plan should address the financial goals, the personal goals, the professional goals of the owner, because that's how we determine how successful the business is and whether the business is successful or not. The business plan should include a marketing plan. The business plan should include a sales strategy. The business plan should include documented processes and systems and procedures for how the work of the business is supposed to get done. The business plan should include job descriptions, objective, rational, clear job descriptions, so that everyone who works for the business knows what they're supposed to be doing, knows how they're going to be judged, knows how they're going to be evaluated. Yes, even if it's a DAO, everyone still needs to know who's supposed to be doing what for the DAO, right? The business plan should have some should address the physical plant of the business. Even in the metaverse, there's still a physical plant, even if the physical plant is just a bunch of intellectual property. The business plan should address the financials of the business, which is a budget, cash flow projections, budget variance reports, accounts receivables if the business is in that position, and other key performance indicators and metrics. The business plan should address how the business is going to hire and manage lawyers, accountants, bookkeepers, and other professionals to maintain regulatory compliance. And the business plan should address how we're going to track how successful the business is. It doesn't matter that it's in the metaverse. It doesn't matter that it is NFTs. It doesn't matter that it's cryptocurrency. It doesn't matter that it's a DAO. It's a business, and there needs to be a plan that explains to the investors and the people who have a vested interest in it how the business is supposed to work. And that includes taxes, and it's not that much different from taxes either. And like, if there was one last thing I would leave you with today, it's that. Don't overcomplicate this stuff.